So you've got a standard savings account, your money's safe, but is it really working for you? Let's break down 4 common places you can park your cash and how they stack up. First up, the standard savings account. It's simple, flexible, and FDIC insured. But the average interest rate? Around 0.4% APY. That's barely enough to beat inflation. Next, the money market account. Also FDIC insured, and it works a lot like a savings account, but with a twist. You may get a debit card or check writing privileges, and the interest rates are often higher. Think 0.6% to 1.5% APY depending on the bank and your balance. Then there's the CD, Certificate of Deposit. Here's the deal. You lock in your money for a set time, think a couple months to 5 years. In return, you get a better rate, somewhere between 4% and 5.5% APY right now. But don't touch it early. There's a penalty if you do. Finally, investing. This is where things get interesting. Stocks, ETFs, mutual funds, they offer average historical returns of 6% to 10% per year. But remember, higher returns mean higher risk. You're not FDIC insured here, and your money can go down too. So what's the best choice? Want liquidity and no risk? Stick to savings or money markets. Want better rates and can lock up your cash? CDs might be your move. Ready to grow long-term and handle ups and downs? Investing could be the upgrade your money needs. Bottom line, your savings account is safe, but now you know it's not your only option. Make your money work smarter, not just harder.